Hey, what's up? It's Ben here. If you are a dividend investor holding for the long run, then you probably don't need to worry about when you'll get your dividends because you'll know that if a company is going to pay dividends, you'll get them because you're probably not going to sell anytime soon. But there are new dividend investors out there who don't know about these things, and sometimes I get asked the question, how long do you have to hold a stock to get the dividend? Now, this varies from market to market, but a good rule of thumb to follow is to hold for the duration between the ex-dividend date and the record date, and that could vary for every company. But if you're in the United States, normally the ex-dividend date comes first, and right after that comes the record date, which is the next business day. And if you're lost with all these dates, I'll show you in a bit with a real example. So if you were to use the general rule of thumb, it'll be considered 2 business days. So the simple answer for that question would be 2 days. But if the ex-dividend date falls on a Friday, the record date would normally start on the following Monday. So now in this case, it'll be a total of 4 days just holding the stock. But if you want to get technical without complicating things even further, technically you can buy and sell within 24 hours and still get dividends. So if you want to do something like that, the idea is to buy the stock before the ex-dividend date, then hold it until the ex-dividend date, which is the next day, and then sell it. But there is a downside to this. Normally on the next day, the price is already adjusted for the dividends, meaning that the stock price has already fallen enough to make the dividend adjustment. So if you were to sell it the next day, you're basically breaking even. Now, this is just an overall view of it. What I'm trying to say is that you can't always get lucky and make some free money, but I mean sometimes if you wait longer, you'll get lucky and come out with a gain. If not, you just have to wait until the price goes back up. This could also be known as the dividend capture strategy, buying and selling around the dividend date. Some dividend investors use the dividend capture strategy just to make some quick money, but then you'll lean towards being an active trader because you're going to have to be constantly looking over your stocks. Now, here's what I'm talking about. I pulled up a random ex-dividend calendar. I did a short video on ex-dividend calendar. If you want to understand it a little bit more, link is down below. But for dividend paying stocks, you'll normally see these dates: ex-dividend date, record date, payable date. So basically, if you want to get your dividends, you have to buy before the ex-dividend date. Anytime buying on this ex-dividend date, you're not going to get your dividend. So then the next day, normally the next day, it's going to be the record date, basically recording the ownership of the stock. And the payable date is the date where you're going to get paid. So for this B2 Gold, this payable date is on December 18th, and then the amount is just 4 cents, and they have the dividend yield as well for the entire year, and it's paying quarterly. So like for technically, if you want to hold this, long term, it doesn't really matter to you, but 2 days will be enough for to buy before the ex-dividend date and then have it be recorded. But if you're like a day trader, 24 hours is doable as well. But the thing is, like, when you try to sell it on the next day or on the ex-dividend date, you're not gonna, basically you break even at best, and sometimes if you get lucky you might go above and make a couple of dollars or so, but depending on the volume that you trade at. So day traders could do that, but you're actively trading these stocks. So my best approach is not, I'm buy and hold investor. I'm not trying to day trade or anything like that. That takes up a lot of my time. I don't want to be reviewing stocks, so I just buy dividend stocks and hold it for the long term. So there you have it. Hope this was somewhat intuitive for you. If you're looking to hold a stock long term, you won't have to be constantly looking at the ex-dividend date depending on your brokerage. Some brokerage will even notify you about the dividend payout, like Webull. And speaking of Webull, if you haven't signed up with Webull, maybe consider signing up with them and to get some free stock, as they're giving away 2 to 4 stocks that could be valued up to $1,600. So if you like free stock, consider checking them out. Links down below. If you like this video, maybe consider giving it a like and maybe consider subscribing for more stock related topics. I'll catch y'all later.